Hello everyone, welcome back to another video on the Alpha Finance YouTube channel. Are you interested in Tesla, Microsoft or Apple? You didn't really have the time to listen to their conference calls, read their 10Qs, but still want to be informed about what's happening in the companies? Don't worry, we've done the hard work for you, and this is our analysis of how these companies are doing and how good or bad these earnings were. So pay attention because some of these stocks are getting to very good levels for you to enter. Now let's talk about Apple, the largest company in the world. On all key metrics, this looks like a huge quarter for Apple. EPS, they were expected to do $1.41. They beat that $1.68 of EPS. As far as revenue goes, $111 billion in this last quarter. This is a huge beat. They were estimated to do huge numbers, but they beat it by a landslide. This 111 billion is also up 21% year over year. If we take a look at their products, we have their iPhone revenue coming in at 65 billion, a really good bit. They were expected to do 59 billion. This is 17% growth year over year. We have their Mac revenues, one of the only segments that missed its estimate, $8.68 billion versus the $8.69 billion estimated. So this is not a huge miss, but still something to note. And it has grown 21% year over year. Some things to note on their Macs is that they are using their own chips for the first time and they had really good reviews, so we can expect this Mac revenue to increase over time. Now we have the iPad revenue. This was up 41% year over year. This might be due to the pandemic and more people staying at home, and it helps to have an iPad to work for some people. And $8.44 billion versus the $7.4 billion estimated. This was up 41% year over year. Then we have other segments such as their AirPods and Beats, Apple Watch, that were up 29% and are now at 12.97 billion. And this is their other products revenue. The products as a whole had a revenue of $95.68 billion. This was $7 billion above the estimates. Other things to note is that they declared their 20-cent dividend. I expect them to keep growing this year over year, and they will eventually become a dividend beast. As far as future goes, we have to think that they are going into what they call a new super cycle, where people are going to replace their old iPhones by new ones because of the 5G technology. Another thing which I believe that will be a really big part of their business going forward is the services business, which has been growing massively year over year. It's already at $15.76 billion a quarter, and this is their App Store, Apple Music, Apple TV, and I believe this will keep growing. So as a whole, let's summarize. Apple beat on almost all key metrics. Their future is looking bright. They are growing a lot year over year. And the way the stock price has been going down recently, I think this is a really compelling stock to buy. So now let's talk about Tesla. They had a mixed earnings report. This means that they beat their revenue estimates, $10.74 billion versus $10.4 billion expected. However, they missed their EPS. They were expected to do $1.03 per share, and they only did 80 cents per share. Let's take a look at what happened. In this last quarter, they did $9.3 billion in vehicle revenues. This represents a 46% year-over-year increase, and if we take a look at their vehicle revenues in the whole of 2020, they did $27 billion in revenues, which represents a 31% year-over-year growth, when compared to 2019. These are huge numbers for a car maker, and this is why Tesla is priced so highly. They had a target of selling 500,000 vehicles this year. They barely missed that estimate by 450 cars, so it's not that bad of a miss. But you might think, this is not really that great, they missed their earnings estimate, but if we take a look here, we can see that this is a company that until really recently were always ending their quarters with huge losses, and they have just reported their 6th consecutive quarter of profits. So this is something really good to see and something you want to see with Tesla going forward. Other things to note is their other sources of revenue, such as their energy storage or their solar panels, is also increasing a lot. As far as future goes, Tesla said they plan to make their premium driver assistance software available on a subscription basis. I really like this. I'm a firm believer of subscription-based services, and this will keep a constant stream of revenues coming to Tesla. Other things to note is that they expect that over a multi-year horizon to achieve 50% average annual growth in vehicle deliveries. This is huge, but if we look at the work that's being done by Tesla, this is certainly possible. They have their usual factories, such as in Fremont, they have their China factory, they have the new ones being built in Texas, in Germany, so we can only expect the vehicle production to go up, and we'll have to see if the vehicle sales will also go up. This will be a huge year for Tesla as new competition is appearing. You have NIO that is becoming bigger and bigger and delving into the Chinese market, which is one of the main sources of revenues of Tesla. You have other companies who are starting to get into this electric vehicle sector, such as General Motors, which is going to be starting their electric truck segments. So, summarizing, Tesla is poised for huge growth, we already knew that. So, what do I think about the price? Some people might say it's really high, some people might say it's really low. It depends on how you value one key metric. And for me, that's full self-driving. As Elon Musk says, the stock market undervalues how good full self-driving is going to be and what their robotaxi technology will bring to this world. So, if you really believe in this full self-driving and believe they will be able to achieve this, you might think that the stock is cheap. But otherwise, this stock is really expensive because as a car maker, there are other companies doing better numbers. So it all boils down to if you want to value Tesla as a vehicle maker or as a tech company which is changing the world as we know it. The next stock we are going to be talking about is Microsoft. They were expected to do $1.64 per share of earnings, but they beat that by a large margin, $2.03 per share. As far as revenue goes, $43 billion in the last quarter versus the $40 billion expected. So, once again, they beat it. Let's go straight into their 10Q. This is their quarterly filing, and we are here in the income statement. We'll mainly take a look at the 3 months ended December 31st, as this is what they have just reported. The revenue, $43 billion versus $36.9 billion last year. This represents 17% year-over-year growth and just shows the quality of this business. They keep raising their revenues year over year, even though they are already a $1.8 trillion company. They keep raising their revenues. Now it's all well and good raising your revenues, but you have to take into account the cost of revenue. And if we take a look over here, we can see that it has barely grown when compared to the revenues. So it shows, once again, the great job being done. As far as operating income, we can see that it went from 13.9 billion all the way to 17.9 billion. This represents a 29% year-over-year increase. And the net income went from $11.6 billion all the way to $15.5 billion. This represents a 33% increase. Their diluted earnings were $203 per share and increased 34% when compared to last year's earnings. Now let's take a look at their balance sheet. There's not much to say. This is a really good balance sheet. They have lots of cash and cash equivalents. Their assets have gone up in this last 6 months, not by much, only 3 billion, but I like to see that they are trying to decrease their liabilities, and they have done so by about 10 billion. Now let's take a look at where their revenue is coming from. They separate it in 3 different segments: productivity and business processes, intelligent cloud, and more personal computing. We can see that they are quite similar in terms of revenues, but they are really different in what they do, and I'll try to show you what each one is doing. Firstly, we have the productivity and business processes, which has grown 13% and is now at $13.4 billion in this quarter. This segment includes the Office commercial products, which have grown 11%, the Office 365 commercial, which has grown 21%. It also includes LinkedIn, which has seen its revenue grow by 23%. In the second segment, we have Intelligent Cloud with their services such as Azure and GitHub. The revenue was $14.6 billion and increased 23% year-over-year. Their server products and cloud services revenue increased 26%, while the Azure revenue growth was of 50%. Finally, we have the revenue in more personal computing, which includes Windows, gaming, and their devices and advertising. Their advertising didn't grow that much, only by about 2%, but there are other sectors who grew a lot, such as their Xbox content, mainly driven by their new Xbox, which was just released. It grew by 40%. And then we have the Windows commercial products and cloud services revenue, which has increased by 10%. So another quarter, another amazing performance by Microsoft. This is a $1.8 trillion company, the second largest company in the world, and it's still raising their revenues by 17% year over year. They have so many segments which are raising their revenues, and I believe this will be the case for years to come. And if you own this stock, I believe you should be really happy with these results. So this is the end of the video. We hope you enjoyed it, and if you did, please leave a like and subscribe. We have new videos every week, and this is the last video we made. You might want to take a look, and we'll see you in the next one.